Hey folks, it's Simon here. Welcome to your Tao Daily for Friday the 28th of March 2025. Markets had a pretty demonstrative move to the downside today with the S&P closing down 2%, the Nasdaq closing down about 2.6%. So we're seeing obviously concern in the market about how US trade policies could impact the economy. We had some data out today that wasn't helpful as well. We saw that February personal spending rose less than expected, and core PCE, which is supposedly the Fed's preferred inflation gauge, rose more than expected. So weaker consumption, higher inflation. All of this was reflected in the University of Michigan March US Consumer Sentiment Index, which was revised downwards to about a 2.5-year low. And the University of Michigan US March inflation expectations were revised higher. All right, so inflation sort of becoming a little bit more of a bugbear again. You combine that with signs of slightly weakening economic growth, and the market starts fearing stagflation. Now, from a technical perspective, a continuation of this sort of recovery, this 5% rally that we saw out of the lows, is pretty well, that's gone out of the window now. And the next item on the docket is a retest of these lows, all right, which are not far away now. In fact, if we look over at the Nasdaq, you'll see that we're almost there. If I just pop the cues on the screen, very, very close to retesting these lows. Now, what's looming at the moment is these tariff deadlines. Wednesday, the 2nd of April, is the deadline for those tariffs to either be implemented or extended or lifted. And the markets, I think, seems to be setting up for a sell the rumor, buy the news event there. I tend to think, regardless of the outcome, given the amount of de-risking we're seeing into it, market is probably likely to rally, even if the tariff news is bad news. Now, sentiment is really shelled out here. So is positioning. These are conditions that are usually ripe for a low. All right, so what I'm looking for, and I'm not trading this, I'm just emphasizing this is something I'm looking for as a possibility, is maybe we take out this low on Monday. All right, and then maybe we trade even lower on Tuesday. And then there's a possibility that at some point, maybe Wednesday, maybe later in the week, we rally and we end up with a bear trap here. All right, so anybody who shorted the breakdown to new cycle lows feels trapped when the market closes back above that level. Like I said, there's no guarantee this will happen. It's just something that I'm potentially looking for into next week. Right now, I'm out of all of my high beta long trading positions. I've still got a couple of positions in more defensive names like utilities and telecommunications. And utilities was one of the rare positive performers. If you look at the market map, utility sector was in the green. Healthcare finished slightly in the red, but a number of stocks did rally. Elsewhere, it was pretty much a sea of red. And a very weak session on Friday can set us up for a down Friday, down Monday kind of pattern where Monday a whole bunch of margin calls get made as a result of Friday's weakness. Heading into the weekend with very light positioning and looking to see what next week brings, particularly with the tariff announcements. That's what I got for you. I hope it helps, and I hope you have a wonderful weekend. Thank you.